I have a pretty special video for you guys this week. So today we're going to be talking about my 1 year journey of investing money. So it has been exactly 12 months since I've started investing. So I started investing in March of 2025. And so I thought it would be a fun topic to kind of talk about it, show you some real numbers, and explain my rationale, my thinking, and then how it's going. So now, initially back in March of 2025, you'll see that I didn't really invest too much, and I was really just trying to get comfortable with the idea of investing. I hadn't graduated from college yet, so I wasn't investing like huge amounts of money or anything. I'll show you the real numbers soon, but I just kind of want to talk about how I started. So initially, I was inspired by a YouTuber named Bob Sharp, who was having a series that, and currently still runs a series called $5 a day into VOO. And it goes exactly how the title or how that phrase goes is he's investing $5 a day into VOO, or averaging $5 a day because you can't trade on the weekends or holidays or whatever. So this is kind of something that I saw. I watched it. I've never invested before at this point. And I looked at that and I said, yeah, I can find $5 a day to invest in VOO and just begin investing. Like, that felt very doable to me. It didn't seem like an insane reach. And the way he kind of phrases it is, think about if you buy a coffee each day, although if you're probably thinking about doing this, you probably don't buy a coffee each day, but it's kind of the same concept, except your money's actually going somewhere useful. So that's exactly what I did. I just started doing it. I have no financial background. I've never invested before, like I previously said. I'm not even in like a financial occupation, or nor did I go to school for anything financial. So this was totally just like beginning investing for me, and not something that I really knew a lot about. One thing that kind of stops people from investing that I want to talk about is analysis paralysis. And you've probably heard this term before, but it's really just when you are over analyzing things, you're waiting to start something until you're an expert on the subject. But really what that leads to is you never starting, because you're never going to be an expert on a subject that you haven't at least tried to work in or do, because that's really when you learn the most. Or at least for me, I learn the most when I'm actually doing that thing, making mistakes, and surrounding myself with the same culture or whatever's going on in that topic. And I'll even share some of the examples of where I made mistakes. So the first $900 that I invested actually went into an individual brokerage account, which is just an account you can open up with no tax advantage. Anybody can open it up. And that was really a mistake, because along the line, I ended up learning about a Roth IRA, so a Roth individual retirement account, where you have tax benefits of all the growth and your withdrawals will be tax-free, barring the age limit of withdrawals. So I've recently switched to this type of account, and you can't like transfer your money from the individual brokerage account to your Roth, but now all the money moving forward will be invested in that account. So I really missed the ball there, where 900 of my dollars are going to grow and have to be taxed when they could have went to my Roth. Now, example 2 is that, like I said, I mimicked this challenge of only investing $5 a day into VOO or VOO, because I was trying to imitate what he was doing, and it just seemed like a good idea to me, right? All investments carry a risk, but that's why you shouldn't invest anything that you can't afford. Kind of similar to gambling if you think about it that way, but this is what I wanted to do. So I was like, yeah, that's a good idea. Let me do this. But since then, I've learned a lot more about investing, and that you should really be diversifying your investments. Not to say that VOO isn't diversified already, but into other types of ETFs or into different market areas. People are always, when you first learn about investing, people are always talking about diversification. But I really just needed to start somewhere. So since then, I've kind of understood investing more and split my investing, and now I invest more money since then, and all these other things that have changed, but they wouldn't have happened if I didn't just start. So, the pieces really will fall in line as you go. So that's kind of example 2 of how make mistakes early on and then correct them as you go, not try and have everything figured out before even beginning. All right, so again, really quickly before we get into my actual numbers, I'm going to show you my tracking of VOO over the last year. So this is just my position. I have like the end of month price as well as stuff like that. But I started in March 2025 and I did a really small amount of money. Once I really started my career in July of 2025 is when I actually started investing a lot of money. So most of the investing does not begin until then, but I think me starting in March still kind of qualifies as 1 year because that money that I invested was still in the market for the months that I did not invest. And again, these numbers are real money. This is what I put in. So I'm not trying to flex or brag most people might even find that these numbers are pretty low. I just want this to be as transparent as possible. So no matter what your perspective is, I think it's more important to understand any amount of money is a good starting point. Maybe you can only do $2 a day. Maybe you can only do $1 a day. I think what's more important is the consistency and time in the market. If you look at this, what I'm about to show you, you'll see that most of my growth came from just the original $20 that I put in. So it's really not about how much you put in. It's about just being consistent and putting it in the market. So that's just my little disclaimer and kind of some background on my situation. But all right, now we're going to get into the good stuff, the money, the actual what I've been tracking. So we're going to kind of break this up. And while I was breaking it up, it ended up just being in 4-month increments just by chance. But we're going to start with March to June. So this is when I started with a very small amount of money while I was still in school. I just wanted to get familiar with the platform. So I actually started with Robinhood, which was super easy to start. I kind of regretted that later, but we'll go into that. So again, I was just trying to get familiar with the platform, understand what it was to deposit, how I bought shares, stuff like that to make myself comfortable with the platform. Now, when I started, VU was only $513 per share. So that was at the end of March. And I can't imagine if I was actually investing like I am now, because again, most of the growth, I actually missed a big wave of the growth on VU where it kind of shot up to the price it is now and kind of been stagnant. So I can only imagine if I had been consistent even starting back then, I would have seen even more growth than I have now, because in the past 8 months, nothing's really changed when it comes to VU. So not much more to say here. I mean, you can kind of see the way or the things that I am tracking here and how they are laid out, but again, not very exciting in these first 4 months. This is just when I was getting familiar. So now the more interesting stuff kind of starts around this 5 to 8 month phase, or July to October. And this is when the real investing begins. So I was truly sticking to the $5 a day, or at least trying to. And what you'll see is in just 3 months of that consistency, I almost had 1 share. So this huge number of 500 or 600, which doesn't really seem attainable in just one straight shot, really stacks up over time. So by the end of October, VU was at about $627. Again, way up from that end of March, just a couple of months earlier. So like I was saying, I missed that wave, but it was nice to see some real progress. I had about $500 invested at this time. So again, nearly 1 share. And it really shows you how the money just begins to stack up if you are consistent. Now, I'm not really going to get into too much of the analytics. If you want to pause and look at this, you can kind of see some of the stats that I was tracking and where they are, but I'm just making some short, quick notes about this stuff. So now we get into the 9 to 12 month phase, and this was November to February, so where we are now. And this is kind of the group where things kind of start to change. So really, the change happened in December. So at this time, I was switching my platform. So like I said, I started on Robinhood, but I actually ended up switching to Fidelity. And I made this change because I kind of have more faith in Fidelity. It's a longer lasting platform. Robinhood's still kind of new, and I wasn't quite sure about the longevity of it, whereas Fidelity's been around for a long time. I think it's going to be around in 50 years. So that's kind of one of the reasons why I wanted to change. I do much prefer the user interface of Robinhood. I think it's a lot more friendly, but you kind of learn Fidelity as you use it. And the second reason why I wanted to change is because I wanted to have all of my accounts in the same space. So like I mentioned in my earlier examples, I ended up switching and opening a Roth IRA, and I did this with Fidelity. So I kind of wanted to just pull that money that I had, or those shares that I had in Robinhood, in this account that I wasn't going to be investing anymore, but I still wanted to be on the same platform that I had my Roth on. And so you'll see a pretty interesting jump in December as well, and that's because Robinhood does not allow you to transfer fractional shares when you transfer your assets out. So I had to put enough money in to get myself to a nice even number of shares so that when I transferred, it wouldn't sell my position. And I think that was around 2 shares at the time. So I dumped a lot of money in at once, which probably skews my numbers a little bit, but it's only because I wanted to transfer out of Robinhood. But I did also stop focusing on the $5 a day at this point. So we're like 4 or 5 months in, and again, this is when I really learned that I wanted to diversify my investments a little bit more. Now, my majority of money is still in VOO, so this spreadsheet or chart doesn't really show the diversification or the other positions I have, but I still wanted to keep tracking my VOO investment because I had been to this point, and I found it very interesting to see how things kind of stack up over time. And again, at the end of February, I'm up to 2.3 shares and nearly $1,500 invested. And I think what this shows is that, with consistency, anybody can stack up a decent amount of assets or a decent value of assets. So again, I think this is very interesting to see and to show that I hope somebody will get some value from showing this, because I'm not really big on showing personal things, but money's money, and I think it's just important to be transparent. I'm sure some people will look at these numbers and say, wow, that's like nothing, or somebody will look at this and say, wow, that's incredible. And to me, I find it incredible that I'm up to 2.3 shares with all this money invested. And when I started back in March or back in July, I really could not see the bigger picture here. Like, it was like if you were to tell me that that I'd have 2 shares at this point, I'd be like, that's crazy. I thought I would never get to $1,200. And just this consistency is what's brought me to this point. So some other observations you might have made just from looking at this is, at the end of February, I'm only up 2.25% or $32. And that's okay. The goal is not for me to be up right now. That's me personally. My goal is to be up a significant amount of money in 40 years, right? I'm investing into a retirement account. So this isn't even money that I'm able to withdraw without penalty until I'm like 59 or 65 or whatever the age is. So I'd actually prefer it to be down right now, or at least stagnant, so that I can keep stacking these shares at a cheaper cost. If I was up a significant amount of money, the money that I'm investing right now would be, worth less amount of shares than when I first started. So if I can just keep accumulating at this rate, then, when it actually does go up, I'm going to see a lot more gains. So I'm okay with this right now, and it's interesting to see too. And like I said, when I first started, it seemed like getting to 1 share was impossible. And now I'm nearly over 2 shares. So consistency is definitely key when it comes to investing, at least in my eyes, as a person who's not really investing a ton of money. And I think, like I said, just going back to some of the errors I made, definitely want to start with a Roth first if you're looking for a retirement account. And I do regret not starting it sooner, but I don't regret starting. I wouldn't be where I am if I didn't just start. If I talked about all the money or all the position of VOO that was in my Roth, I'd only be about, $600 or so dollars. So imagine just wiping out that first 900. I'd be in a much worse position. Another kind of thing going into it was transferring out of Robinhood. So that costed me $100 if you weren't aware. If you're in Robinhood and want to transfer your assets out, it's an $100 fee. So it sucks, but again, I don't regret it. I trust Fidelity more in the long run, and I wanted all my accounts together, so $100 is a small price to pay for that, and something that I figured would be necessary in the future anyway, so might as well just get it out of the way now. And so just to kind of go into my outlook for the future is I'm going to continue to track this investment. I can't wait to see what it looks like in year 2, year 3, year 4, year 5. Who knows what's going to be going on by then, but I'm going to do my best to keep tracking this. I think it's interesting for me to look at, and now I get to share it to you. And I think that's great. You kind of give and you take. The overall moral is just to start. Don't try to pick your perfect stocks, ETFs, whatever it is. Don't try to investigate everything, because you're just going to burn yourself out doing that, and it's just not possible. So you just need to start doing it and learn along the way. And that goes for pretty much anything in life, not just investing. So I hope you enjoyed this. I wanted to be as transparent as possible and, pay forward what I've had others do and what I've learned from. So I think it's important to see real world examples of, the practice that so many people preach. So hopefully you learned something about this, took something away from it, and can just start doing whatever it is that you've been waiting to do. So catch you guys next week with another video.